Wealthfront's S&P 500 Direct is a fresh take on investing in America's biggest companies, designed for people who want more control over their investments and are looking for ways to pay less in taxes. Instead of just buying an S&P 500 ETF where you own a slice of everything bundled together, this tool lets users actually hold shares of each company in the S&P 500 that they want, down to the individual stock level. That gives a totally new way to customize, especially for those who'd rather not have exposure to certain companies, maybe for personal reasons or to steer clear of employer stock. If a company doesn't align with someone's values, it can simply be removed, and the portfolio automatically rebalances to keep tracking the index. The standout feature is automatic daily tax loss harvesting, and this is really where Wealthfront's S&P 500 Direct shines. The tool watches all 500 stocks in the portfolio, looking every day for tiny dips in price. When a stock drops below what someone paid for it, the system can sell it, claim a tax loss, and then buy a similar stock back. These losses add up and can help lower tax bills, especially if an investor gets a lot of their income from capital gains. Think people who get paid in stock or folks who regularly sell investments. Even if there aren't big capital gains, up to 3,000 of those tax losses can offset regular income every year, and any leftovers keep rolling forward to future years. That means potential savings stretch out year after year. Traditional financial advisors usually only do this once at the end of the year, so this kind of precision is a big upgrade. For all this automation and optimization, Wealthfront charges a management fee of 0.09%. For a $20,000 account, that's less than $2 a month, making it about as cheap as the most popular S&P 500 ETFs like SPY. The catch is that there's a pretty high minimum to start, $20,000. That means it isn't set up for beginners with small balances just learning the ropes. But for people rolling over from a big bonus, equity payout, or consolidating investments, this fee is impressively low for the sophistication offered. Daily tax tracking, rebalancing, and not having to think twice about rebalancing or compliance headaches. It's especially appealing if someone is too busy to manage things themselves but still wants every advantage possible. Still, this solution has a few limitations. The biggest one is definitely the minimum investment, which shuts out new investors or those with less to work with. If tax bills aren't a concern, like for anyone with a tax-advantaged account or limited capital gains in a year, all that harvesting might not be valuable, so a regular ETF could suffice for some. And since the portfolio gets adjusted whenever stocks are excluded, there can be times when performance drifts slightly from the S&P 500 itself, especially if a lot of stocks are left out. Plus, while the process of daily harvesting is hands-off from the investor's side, it's important to remember this still involves stock sales and purchases, and each move gets tracked for tax purposes. To wrap it up, Wealthfront S&P 500 Direct is a powerful, low-cost way to invest directly in America's biggest companies while maximizing tax advantages. It stands out with features like personalized stock exclusion and daily tax loss harvesting, which can mean real savings for those with significant taxable investments or stock comp. But it's best suited to investors with at least $20,000 to put to work. For anyone in that boat, craving less tax hassle and more control, and willing to let high-tech software do the heavy lifting, it's a strong, modern pick. That said, those who have simpler tax needs or don't want to commit that much capital should weigh if the extra layers are truly worth it, since sometimes a straightforward ETF can still be the right answer. And as always, when investing, there are risks. Returns aren't guaranteed, values fluctuate, and while the tax strategies are great, everyone should consider their big financial picture before jumping in.